Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Russia's decision to send some troops back to their bases after some military exercises has caused a relief rally in equities while also weighing on oil, the dollar, and gold. Although the announcement was not made in time for most Asia-Pacific bourses, those that are open later, such as India, are gaining. Europe's Stoxx 600 has recouped around half of yesterday's 1.8% loss. The US S&P futures and NASDAQ futures are 1% to 2% higher. The greenback is more expensive than most currencies, while the other safe havens Japanese and Swiss francs are slightly less. After reaching an 8-month peak near $1,880, gold is now trending downward. Initial support can be seen in the $1,840 to $1,850 region. Yesterday's short-term poke at $9.95 per barrel showed that March WTI has recouped all its gains. Nearby support can be seen at $1.92. Asian Pacific market. Japan's economy saw growth in the fourth quarter. However, it wasn't as strong as expected and deflationary forces seem stronger. Although the dollar trades with a stronger bias against Japan's yen, it is still within yesterday's range JPY 115.00 to 115.75. If the risk-on sentiment is sustained, the softer yen could help Japanese stocks on Wednesday. The Australian dollar trades within yesterday's range 0.7085 to 0.7160 dollar. Market of Europe. The strength of the UK labour market is evident in the UK employment data. After a December revision of 131,000, January saw a rise in the number of employees by 108,000. On the day of the pandemic, there were 435,000 more people working. But it is important to note that real wages are being squeezed due to inflation and taxes. Sterling is not moving quickly. It remains stuck in the $1.35 to $1.36 area, which has largely held it back this month. The euro rebounded from yesterday's dip below $1.13 to reach nearly $1.1355 this morning in Europe. Market of America. Bullard, the Fed's chief economist, did not retract his hawkish comments last week. He supports front-loading rate increases and reiterated his call to 100 basis points by July 1. He believes the Fed's credibility is at stake with inflation that has been much higher than anticipated 6 months ago. Bullard asks the Fed to ratify the market expectations set out in the 2-year note. The Canada-wide protests that paralyzed Ottawa, disrupted production, and caused trade disruptions have now dissipated. However, there are still border blocks. Yesterday, downtown Ottawa was still occupied. Yesterday's Canadian dollar reached CAD 128. This was the highest level in its recent range. It held. The risk of mood is outweighing any negative impact that softer oil prices may have on equity prices. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.